Welcome back. Let's check markets here. Futures are indicating a decline of better than 700 at the opening of trading, about an hour and 15 minutes away. That's down almost 2%. The Nasdaq's down 263, 1.5%. President Trump's reciprocal tariffs took effect at midnight last night, and China is retaliating again this morning. It is announcing an 84% tariff on all U.S. goods after President Trump confirmed that the U.S. will move forward with a tariff of 104% on Chinese goods. Beijing also adding 6 U.S. companies to its, quote, unreliable entity list and 12 companies to its, quote, export control list. JPMorgan Chase Chairman and CEO Jamie Dimon releasing his annual letter to shareholders this week, writing, tariffs raise prices and slow down economic growth. We are here now with the man himself to talk more about the backdrop in this Fox Business exclusive. JPMorgan Chase Chairman and CEO Jamie Dimon. Jamie, great to see you.
Very happy to be here.
Thank you so much for joining us. And you know, congratulations on this incredible career and your leadership. We appreciate your leadership.
Thank you.
You've seen so many crises in your days before, financial crisis.com, et cetera, et cetera. How does this moment in time compare to those?
Yeah, well, it's nothing like '08. Okay, so in clarity, nothing. And the 2000 .com thing was very brief. I mean, it lasted like 9 months or something like that. So,
but how did the financial crisis when you almost paid $2 a share for Bear Stearns?
Yeah, we paid 10.
I know.
It was still very cheap.
You wanted 2 initially.
You know, Paulson wanted 2. I wanted to get the deal done, and so it doesn't compare to that. The world was massively over-leveraged. There was a mortgage problem. You're going to have, you know, $500 billion or maybe $1 trillion of actual real problems. The banking system's not that leveraged today, but it's serious. And it was serious before the last election. We have a huge, complex geopolitical situation, huge fiscal deficits, not just here, but around the world, sticky inflation, which I personally think will not go away so quick. And then you have, you know, what's going to happen to tariffs, what's going to happen to trade, what's going to happen. So, you know, tariffs and trade are just part of that mix. They don't completely stand alone.
So what do you think about the tariff plan?
I think it is perfectly reasonable for someone to say that trade was unfair. There were unfair trade things. And remember, it's not just tariffs. It's tariffs. I think they have the VAT wrong, how they understand it, and I think they should really get a better understanding to make it easy to negotiate. But there are all these non-tariff barriers around food and energy, and then subsidies, which, you know, China's famous for. So it's totally reasonable to say we want to make trade better. But I also want to point out to the Americans, we have the best economy in the world. Our GDP per person is $85,000. China's is $15,000. So you got to put a little bit in the context. But, you know, and then, of course, when they put the tariffs in, it was way beyond what people expected. That will cause a little inflation, slow down growth. But I hope what they really do is let Scott Bessent, who I think is a professional, negotiate. And I know Japan's here. I gather Korea, Vietnam have called, and then eventually Europe. Get those things done quickly. If you want to calm down the markets, show progress in those things, and let Scott take the time. Trade deals are very large and very complex. They can't be done overnight, but you really have to have teams working them to get them right.
It sounds like you're taking a calm head in the face of all of this, despite the fact that we've seen $6 trillion in market value wiped out in about a week.
Yeah, I'm taking a calm view, but I think it could get worse if we don't make some progress here. And of course, you know, trade wars, you saw China raise their rates today, you know, and people are going to get angry and they're going to have responses, and every country's got choices. So there are short-term choices, there are long-term choices. And I also want to point out, if you kind of look forward in the next, you know, 60 days, every company is going to be telling you guys, you know, what it means to them. You know, I think today I saw Delta remove their guidance, and things like that will affect stock prices again. So it's not over yet. And then you've seen tremendous moves in swap prices, asset prices, treasury prices. There's a 10-year treasury auction today and how they go. So yeah, but let them settle down, take a deep breath, negotiate some trade deals. That's the best thing they can do.
I want to get back to what you just mentioned, the earnings season, in a moment, because I spoke with a number of CEOs just last night, and they said, I'm cutting expenses, I'm cutting my CapEx, so I want to get your take on how that plays out. But look at the 10-year this morning, Jamie. It's up almost 17 basis points. Yeah. And I just spoke with the Treasury Secretary, Scott Bessent, and asked him if part of this is China selling treasuries. Here's my conversation, a snippet of it with Scott Bessent. Watch this.
there's one of these deleveraging convulsions that's going on right now in the markets, and I think it's in the fixed income market. There's some very large leverage players who are experiencing losses. They're having to deleverage. I believe that there is nothing systemic about this. I think that it is an uncomfortable but normal deleveraging that's going on in the bond market. And I expect that as we see the leverage come down, the risk managers tapping people on the shoulders, telling them to bring their books down, which is what happens every couple of years as leverage builds up, then the market will calm down.
Is China jumping treasuries to try to put pressure on this this market?
Yeah, I think it works against their purposes if they are dumping treasuries, because if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone.
Right.
And again, when I hear all these stories, that the dollar is no longer going to be the reserve currency. If you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
Yeah. Jamie, your reaction?
Well, he's exactly right. You have a lot of deleveraging hedge funds and players out there, which he obviously is quite experienced with things like that. And that is the initial effect. There will be other effects, and we still are the reserve currency, which will be true for a long time. But a very important point, China and Russia have made it clear they want to kind of dismantle the post-World War II system. And I think the goal of all this trade stuff should be to make Europe and our trading partners, Japan, Korea, Philippines, stronger, not weaker, bring them closer as we build up our military. And any trade that protects military, that we should definitely do. I mean, we made a lot of mistakes about, as you know, pharmaceuticals, shipping, pharmaceutical ingredients, penicillin.
That we're so reliant on China for all of this stuff.
We can't rely on any potential adversary for things we need for our military. And so, there I'm quite sympathetic. That we should do. That's absolutely paramount.
And you wrote about this in your annual letter to shareholders this week, and you talked about national security being the #1 priority here. Right. But it takes time to get the supply chains to America. So in terms of getting this done fast, I mean, how much faster can this happen? And was there another way to get corporations to move supply chains here other than forcing them to it? Because we've been talking about this for a long time.
Yeah, you can't really force them, but like I said, there are tons of ways that people manipulate trade, but and as subsidies, and as land grants, and as guarantees. We need to do that for rare earths, pharmaceutical devices, semiconductor chips. We should do it right. I mean, we shouldn't do it in a way that wastes a lot of money and lets corporations feed at that great tax trough or something like that. And it could be done, but it will take years. But we need to start right away. And even some of these other supply chains, a lot of companies are too reliant on one country. It'll take them to move. But I think you got to separate, making sneakers from making guns. One is like really important. One is, it's not as big a deal. So,
Great point.
But the point about national security is economic security, national security are almost directly related in the long run. Hopefully when these wars get resolved, and I hope in the interest of Ukraine, where they have sovereignty when it's over, and the interest of Israel, where not being constantly attacked by terrorists on 3 sides, you need to keep the economic alliance together. I think it would be in Russia's and North Korea's, Iran's, and China's interest to fragment the Western world. And I think that would be the biggest long-term mistake. And I'm talking about over 30 or 40 years. I don't want to read the book about how the West was lost.
Yeah, but at the same time, timing is of the essence, right? I mean, you just mentioned a moment ago that we're headed into the earnings series. You're obviously reporting earnings on Friday, so we're sensitive to that. But is there anything you can tell us about the environment right now in terms of loan demand, in terms of defaults? Because while all of this is happening, you've got, for example, your economics team predicting a recession this year, and you've got corporations saying, I'm cutting back on spending and investing right now.
Yeah, so normally I don't pay that much attention to anecdotes, but you heard them. They're real. I hear it from just everybody now. I'm going to cut back a little bit. I'm going to wait, see what happens. That is kind of recessionary talk. So, we've been in this kind of very soft landing for a long time. Consumers have money. They were spending money. Corporate is making profits. I do remind people part of that was because of our extraordinary fiscal spending. we borrowed and spent $11 trillion since COVID. And that obviously drives a lot of growth. It drives corporate profits. So I think what we're going to see now is corporations making announcement after announcement about, don't expect my guidance to be true. I'm going to hold back here a little bit. These are long-term decisions they have to make. They may want to see the tax bill, which hopefully they can get done in July. So yeah, I think you're going to see a slowdown. I think the economists are probably right to say that you should expect that.
Well, how significant a slowdown? I mean, are you seeing defaults?
Not yet, but I expect them. And the other thing, which we haven't had any slowdown or real recession, and COVID was so short, I almost don't include it, and so long that if you have rates going up a little bit, and inflation is sticky, and credit spreads are gapping out, which they're going to, I think you'll see more credit problems than people have seen in a long time.
And yet, you've got to get ahead of it and cut expenses now. You've talked about the 10% to all of your different groups at JPMorgan.
Yeah.
You say JPMorgan's going to be fine, but we could see a softening of the macro story.
Yeah. So JPMorgan, I did say to the JPMorgan people the 10%, but I think we just got a little sloppy in the last 5 years. I'm kind of mad at myself. I remind people, what kills companies is complacency, arrogance, bureaucracy. And that little speech I gave, I was talking about Sears and A&P and Eastman Kodak. And it's amazing to me that these companies, they just get too lax in what they do. And we got a little bit of that too. So we're going back to killing bureaucracy. We put some headcount controls in place, not because we're not doing well, not forcing people to cut. I call it just like going for your run and eating your spinach. It's not a big deal. We can handle that, and we'll become a better company. People are having a lot of fun, by the way, raising their hand and saying, why are we doing this? Why can we cut this out? And whenever they're with me, I say, just do it. Go ahead. You got my permission.
So are you hearing that from CEOs as well in terms of business managers? Are they now going to start pulling it in and cutting back on various expenses?
I think you're going to see a little bit of that, yes. Yeah.
But how significant would you expect that? Do you personally expect a recession?
I am going to defer to my economists at this point, but I think probably that's a likely outcome.
Mm-hmm. Yeah. Because markets, I mean, when you see a 2,000 point decline, it sort of feeds on itself, doesn't it? Because it makes you feel like you're losing money in your 401k, you're losing money in your pension. You got to cut back.
Yeah. I always remind people, markets aren't always right. But sometimes they are right, and I think this time they are right because they're just pricing in uncertainty at the macro level and uncertainty at the micro level, at the actual company level. And then how it affects consumer sentiment, it's hard to tell. Consumers still have jobs. Wages are going up at the low end, which I think is a good thing. But if companies start cutting back, yeah, the consumer sentiment changes and business sentiment changes. I think you've already seen business sentiment change a little bit. Hopefully, no one's wishing for that, but hopefully if there is one, it'll be short. But But I do think fixing these tariff issues and trade issues would be a good thing to do. That will get one major uncertainty behind us. We have the strongest economy in the world. It would be good not to add to the uncertainty out there. How
long would you wait to see these fixes take place?
I don't know. I mean, I would, whatever they can do, like I said, trade is really complicated. I mean, these trade agreements are thousands of pages long. It is product by product and area by area, non-trade barriers, subsidies. There's tons of food. If you spend time with just food alone, you'd be shocked how many different food agreements there are and disagreements and protection of local farmers, which almost every country does. So the sooner, the better.
Well, in terms of
they should get at it.
In terms of the capital markets business, you've got to believe that trading is going to do well in the first quarter. But we've sat here with various CEOs who said, I'm not going to do my IPO right now. Right. I'm not going to do my deal in terms of M&A. We spoke with Ken Leon from CFRA, and he says that the first quarter was very weak for those kinds of capital markets businesses.
Yeah. So,
without giving anything away, because you're reporting earnings.
Yeah, so I always tell people volatile markets generally are good for our capital markets trading business, but they're generally not good for equity, debt issuance, stuff like that. So, I mean, it's very important. JPMorgan is going to be in fine shape, but almost no matter what happens, because we always run the company so we can serve people in good times and bad times, just like we did during the great financial crisis. But I do expect the bad part of these volatile markets isn't what it does to a JPMorgan, it's what it does to the capital markets and the ability of companies to raise money. So IPOs are being canceled, a couple of hung deals out there in the high yield land and bridge loans, and that just slows everything down. And so that's the bad part of these volatile markets. It's not that it's bad for us. It's bad for small businesses, middle-sized companies. Large companies can usually get the funding they need.
President Trump has been trying to put America first. Is he doing that while also alienating foreigners to America? Somebody told me last night, look, I'm trying to do a deal in Canada. They say, we don't want to buy American in any way right now. Do you see any anti-American sentiment?
Yeah, we've lost a couple of bond deals already because they're not mean. They simply say that, look, we'd rather just do this with a local bank than with a U.S. bank. Look, we could overcome that. That's why part of me thinks that don't let this go on too long because it's causing cumulative damage, including huge anger at the United States. Like I said, if my goal would be keep the allies together, get them together, keep work on that. And you fix the trade. Whether it's unfair trade, fix it. Doesn't matter if they're an ally or not, it should be fixed. And I think there are legitimate complaints about military spending. They need to spend more in the military. So I hope what you saw, like for Europe, is a wake-up call. Fix their economy. They have huge bureaucracy, red tape, which I now call blue tape. And, and if they fix that, that'd be good for them. And then, pull them closer and keep the Western world together.
And the European Union, by the way, I don't know if they're unified. I mean, it's called the European Union, but, Germany is in a different place than I think Italy is. So how does President Trump do that?
Yeah, Europe should seize the moment. There's the Draghi report. I think they all acknowledge they need to spend more in the military. They all acknowledge that I think their GDP per person has gone from something like 75% of America's to 50% of America's. I mean, they got to look inside and say, what did they do? And it's literally rules, regulations, and red tape, and anti-business, and too expensive tax systems, and labor laws that were meant to protect workers. But very often these laws are passed, they have the completely opposite effect. They protect existing workers, but not new workers. They don't adopt technology fast enough. They don't have enough innovation. They could fix that. And I actually think you now have, between President Macron, Chancellor Merz, Maloney, Keir Starmer, those people are coming together, and they're kind of saying all that. Yeah. They have to do it. It's hard, in Europe.
And Maloney is on her way to the U.S. to meet with President Trump on the 17th. In your annual letter, you wrote about how successful JPMorgan is moving, what did you say, 10 or $12 trillion a day in terms of the amount of business that you're handling, and you gave the kudos to all of your people. What's interesting, when I was reading that, I thought, it's interesting that here's a bank that's moving so much money and doing so much activity, and you're not even the biggest in the world. Chinese banks are much bigger. So tell us about that a little, and the competition that you face when you go up against some of these large Chinese banks for business. Because I think most people realize now China is an adversary, if not an enemy right now.
Yeah. Well, I put them in the adversary category, not enemy. But, well, first of all, we compete with banks in every country. We compete with fintech here. And that $10 trillion, it's important to put it in context, $10 trillion of money being moved, $3 trillion of securities being bought. But it's also representative of the enormous flows around the world. So when people can estimate, they predict the effect of global flows of capital, it's hard to do. I mean, you're talking about hundreds of trillions of dollars a day that are moving around as people making all these different decisions about where to invest and where to send their money and who to pay, things like that. So the Chinese banks are bigger in terms of total assets, not in terms of market cap, probably about the same size. They're supported, they're state controlled. So it's very, very different. So they're kind of part of how they look at it. And, China has this state, I'm going to call it state capitalism, kind of this mix of subsidies and how they run things. And it gives them the benefit that they can run their country as a whole. And we don't. We have a democracy, and it's very different. But I do think what I say about us is we need to get our own act together. We need to get, if you want to have America be very strong, our own health care, our own infrastructure, our own immigration, our own regulations, our own red tape, our own affordable housing, we could be growing at 3% a year. And I think we should be striving to that. And have we done that the last 20 years, our GDP per person would be $15,000 more. So, to me, China isn't. If you look at us, 85,000 GDP, theirs is 15. We have all the food, water, and energy we need. They import 10 million barrels of oil a day. They're surrounded. They have a very complex geopolitical neighborhood. Philippines, Korea, Japan, Indonesia, Vietnam, Pakistan, India, Russia. And they're kind of angering some of those folks, too, because of what they're doing in the South China Sea. We don't. We have peace. We have the Atlantic and the Pacific, and we have peace with Mexico and Canada. We're kind of blessed. We're blessed with the gifts of God and the gifts of the founding fathers. And so we should just get our own act together, and we'll be fine.
Are there areas around the world that you see right now that are doing well?
Well, America's probably doing the best. And part of that is fueled by the fiscal spending. I remind people, we are exceptional. We're not quite that exceptional. If other countries had borrowed and spent $1 trillion, they would have had more growth too. But there's another side to that, the sticky inflation and things like that. But there is no, look, there are a lot of countries do a lot of things well, but there's no country with quite the innovation we have, quite the capabilities. This energy, it's an unbelievable thing because not only does it reduce the cost for all of our industrial companies, but that LNG that we could send to Europe is cleaner for Europe because their alternative is coal, and they need it to be secure. So to me, we have this unbelievable position in energy. Our financial services, we have the best financial markets in the world. I'm talking about all of it: capital markets, hedge funds, private equity, investors, and it is part of the flywheel that creates all this innovation you see. And you don't just see it in New York. You see it in Silicon Valley, but you see it in St. Louis, in Kansas, in Austin, in Nashville. And so this country is unbelievable. Democracy works in spite of the fact we seem to have a lot of polarization these days.
I want to get into policy with you, Jamie, and get your thoughts on what policies are needed now. The tax cuts conversation is going on. We're going to take a short break and tap into the energy capacity in America and the efforts right now to extend the Trump tax cuts. I'm talking with the chairman and CEO of JPMorgan Chase. We'll be right back.